What a wild ride it has been the last 5 days. Nifty has corrected by over 900 points, about 4% in the most recent falls. We are looking at 21,710, which is March low, on Nifty as a crucial support. That also I think coincides with the 100-day moving averages. That going to be a key floor for the market unless the situation further escalates from here on in West Asia.
Hi, first of all, very good morning, and always a pleasure to be here. Well, you're right. I will always say this that these dips, at least the geopolitical ones that come about, they are actually a buying opportunity from a medium-term perspective. However, in the near term, things get a little tricky because depending on the news flow that keeps coming in, there is always this possibility that you could see these wild swings in the market, and that's exactly what we are getting to see. GIFT Nifty was suggesting a much deeper much lower opening. We didn't get that. There's been a fair bit of recovery. My suggestion here is, 21,700, 21,800 is a strong resistance zone. Earlier it was a resistance zone. So we'll start acting as a support zone from here on. If you are an aggressive trader, then you can consider going long at current levels. But my suggestion is that, keep light because with the kind of news flow that we are seeing, if something changes overnight or let's say in the course of the next hour or so, there's a possibility that the markets could take turn for the worse. Structurally, my concern is more towards Bank Nifty. Here, the index has seen, a sharp selling after hitting that 49,000 mark. Ongoing FII selling will mean that, there will be pressure on this because we know historically banks and IT have been the two sectors where FIIs have had strong positions. So if that selling continues, then these stocks and thus the index could see some sort of a pressure going forward. So Bank Nifty, I'm a little cautious on. Nifty, I will look for trading opportunities, on the bounce, wherever I find risk reward ratio favorable. So that's the overall view on the Nifty and the Bank Nifty both.
All right, and there was something very interesting. I was looking at the futures market. FII net short position in the futures market is over 1 lakh contracts now. And when, at a time when they are so aggressively betting on the short time, the market in a weird way kind of does see a pullback. So are you factoring that also in your analysis, sir?
Of course, that's a very good point. And every time we've seen, the FIIs cross 1 lakh crore kind of a mark, there is a bounce that does come around in the market, and it's not a bad idea for the FIIs to be short on the market. It gives a market that support at least on the lower side. Now, whether that happens from 1 lakh 5,000 contracts or 1 lakh 15,000 contracts, that always remains a mystery. But on the whole, yes, that does indicate that we're reaching a zone where uh, selling is perhaps a little overdone and markets could see at least some sort of a respite or relief rally. Also, to
Right.
add to that, the PCR on the Bank Nifty was, I think, 0.07 this morning before trade started and zero point 0.8 on the Nifty. So there too, we are seeing some sort of overselling, overheating, or rather overselling territories approached. From there, that perspective also, we could see some sort of bounce. So while these indices are due for a bounce from a near-term perspective, I will still maintain that, the Nifty could perhaps consolidate with some sort of positive bias going forward. Bank Nifty, however, might perhaps, be under pressure. So you can play for a dead cat bounce. The only problem is where do you play that from, right? That level is difficult to pinpoint.
All right. And but apart from what's going on as far as geopolitics is concerned, we have enough and more local factors to also worry about. And the earnings season, sir, is on. Infosys, which by the way has a 7.5% weightage on Nifty, had another difficult quarter. Revenue and margins dipped quarter on quarter. Profits jumped by about 30%, but that was on the back of a big jump in your other income component. Also, the guidance coming in from the management is not inspiring, right? FY 25 revenue guidance is seen at 1 to 3%. Operating margin is kept unchanged at 20 to 22%. But Kush, coming back to you, the ADR last night that cracked by about 7.5% in the pre-opening on the NYSE. It settled about 2.5% lower. Here it's down about 2%, but that's also in a following market. But very interestingly, we are at the lowest level on Infosys since November, and approaching that 1350 odd zone from where the that big rally took off. Is that a big support you're tracking on Infosys?
So look, two things here. One, from a technical standpoint, 1350 will remain, a strong support zone because it's not only, in the November, October of last year, but also if I, dial back the clock a little, then March 2023, and then before that, September 2022. Uh, Multiple times the stock has rebounded, from those levels. So from a technical standpoint, it is for sure a very strong support zone. My concern, however, is around the recent trend. If you see, most of the IT names have been under a bit of pressure. Uh, on the falling side, the volumes have actually peaked. So perhaps, once we reach that 1350 level, the stock could also enter the oversold territory and perhaps see some sort of a rebound. But on the whole, the trajectory looks south, and not just for Infosys. If you look at the other three names, the other three big names, TCS, HCL, and Wipro, here too the trajectory is actually not so encouraging. So, as I was mentioning to someone in a conversation, that in the IT, for these four names, I'm ranking stocks in the order of, which is the less uh, damaging ones, right? So TCS perhaps tops the list where it's the least damaging one. So if you want to invest in the big names, TCS from a capital standpoint perhaps might stand out, but I don't expect a big momentum there too. Infosys, HCL Tech, Wipro, all three stocks have been under a bit of a pressure and might continue to remain, even if you consider the economic situation, especially in the US. So for me, this sector for now is an avoid. If you have to allot fresh capital, I would say wait for some time. There are other spaces where you can, deploy that capital. So Infosys, TCS, and that remains the theme for a lot of fund managers also. So that's why you might see some sort of an ongoing pressure on these stocks.
All right, and interesting that you picked TCS as perhaps the safest of the stocks to play at, because in the last 1 month it has declined by about 3%, whereas Infosys, HCL Tech, Wipro are down about 8 to 10%. I mean, it has not delivered tremendous returns over a 1 year period, but it has been a rather safe bet as far as IT stocks are concerned. But we'll move on, and we'll move on to Bajaj Auto, because that company had a stellar quarter. Revenue surged by about 30% year on year. Profits were up by 18%. EBITDA in the quarter was the highest ever, marking a 35% year-on-year jump. And what's more, the company has registered, as far as the market share gain, it has done exceptionally well, especially on the 125cc plus segment. It has registered a 4x growth versus the rest of the industry. And, it reflects in the prices as well, Kush, right? I mean, the stock has been a tremendous wealth creator. Best, in fact, when it comes to Nifty 50 basket. But again, the question is, can it continue to rally from here on? Because again, it is sort of expensive, right? It is very close to about 2 to 3% away from its record high levels also.
But see, on the whole, if you ask me, if I were to pick one stock from this space, Bajaj Auto would make that cut. Now, the only problem is that, as you said, the stock's already run up quite a bit. Right now, it's in that consolidation mode. It's in a way a good thing that, with, a consolidating or a slightly negative market, the stock is also in that downward pressure. So all the consolidation and all the profit booking that has to happen in that stock after that, sharp, smart run up that we've seen, perhaps will happen in this phase. So I will actually look for buying opportunities in Bajaj Auto at slightly lower levels. Right now, the fall hasn't really stemmed. If I look at this from multiple time frames, you look at it from a daily time frame, from a weekly time frame, the stock is still sliding lower. And perhaps, it might be a good idea to just wait and watch for some time. But as I said, on the whole, I am perhaps a buy on dips kind of, I have a buy on dips kind of a view on Bajaj Auto. Couple of key levels to watch for. 8500 is the first one. If in case due to market conditions that level is breached, then you're looking at 8250, 8300 kind of zones. From there on, I expect the stock to rebound, and it will just make that risk reward ratio, far too attractive for me to miss out. So perhaps, at lower levels, Bajaj Auto does remain to, to accumulate, if you're deploying any kind of fresh capital in the auto space.
All right, and interestingly, it is showing a bit of a dip this morning. Bajaj Auto is down 3% as we speak. So perhaps an opportunity to enter over there. But, at a time like this, when the markets are so volatile, Kush, what are your top picks for the traders, in the short term, that is?
I'm so glad you asked me that. I'll just preface that with, a quick 30-second commentary that I've already mentioned that geopolitical reasons are, a very good opportunity to buy stocks from a medium-term perspective. Now, all stocks that you've had on your radar before these, news and these tensions hit the market, should continue to be on your radar and you should look to accumulate that. The spaces that we have on our radar are capital goods. For some of these names, are that we've got on our radar. So we continue to monitor these, spaces, and wherever we find that these stocks are starting to take support, we will go out and grab these. JSW Energy is one stock. Uh, Today the stock is slightly lower, but exactly case in point that when these stocks start to slip, not a bad idea to start accumulating them. So JSW Energy 610 is the near term stop loss that I'm suggesting. 655, 675 are the targets. But let me also reiterate that because of these situations, if it does come a little closer, even if the stop loss is triggered, I might perhaps push my stop loss a little lower and accumulate at these lower levels. M&M is one other stock that I have on my radar. We're fairly confident of the 2200 level being hit here. 1950 would be a stop loss. But if you want to play safe and hedge your bets, you should also have a short trade along with you. So Bajaj Finance is a short trade, that we've got. If you see the stock actually ran up in the last, in the last month. Perhaps it was, an adjustment due to the year closing, perhaps something else. But ever since it hit that 7,300, the 7,400 mark, it's been slipping lower, and it's been a short trade that just keeps giving. So Bajaj Finance, April futures, if you want, you can go out and hedge your positions and short. 6,800, 6,725 are the targets. 6,975 is the stop loss on this one. And just as a disclaimer, we've discussed these stocks with our clients as well on our advisory service.
All right, Bajaj Finance on the short side and JSW Energy and M&M on the long side. These are the three trading ideas from Kush Bora for the short term. Sir, thank you for giving us time here at News 9. Always a pleasure speaking with you.